Great. Okay.
So, I mean, I have a question.
Yeah.
Um, you know, several weeks ago when the market has the pullback, a lot of high PE stocks got actually hit very hardly.
Sure.
When now the market at new highs, those stocks are still at those low place and did not rise with the market. For example, the U, the Snow, the PLTR, all those type of stocks. I just want to ask whether you have experience in such scenario, whether later on those high PE stocks would have a rotation to catch up, or if the market turn around and go down, will those stock actually plunge more, or will those be more resistance because they never rise with the market?
Okay. So I think what happened in those situations, Sean, you have to look at, I think one of the catalysts was the vaccination success or, opening the economy, and the names that you just suggested, what it showed that, the work at home kind of stocks, they were actually getting hit, and the money was moving more toward where, like for instance, moving to the leisure and the Carnival cruises of the world, and the hotels, Las Vegas hotels, and so the money was moving more towards opening the economy and going away from basically the theme stocks. And obviously, the other stocks such as like Amazons of the world, Apples of the world, Googles, they are, they are multifaceted, so they can come back. Tesla can come. And basically, when the technology stocks were getting hit, it was most of it was because of the rates and inflation. So those two really affected them because, as you know, when we're looking at the as far as the discounting model, we look at the discount rate. So as the rates go up, obviously with the higher PE investments, they get harder if the rates are higher. So basically, that was one of the things, and also the cost of goods. But as far as the stocks that you mentioned, I believe, well, I haven't invested in them, so I don't know exactly, but I'm familiar with them. But I know a lot of theme stocks, they got, including the Zooms of the world, they got hit harder than other, let's say technology stocks. And is that helpful? Does that make sense, Sean?
So, do you think if the market turn around, do you think those stocks will plunge further, or they can be more, because they already been there, they can be more resistant to the falling?
Well, you have to remember, like these stocks, they were. This is again, stock market is a discounting mechanism, so they were. There was just so much enthusiasm for them that's why the PEs were expanded based on the revenues and everything. So if people are gonna, I know, like for instance, I'm getting called from 24-hour fitness, right? So they're opening in my area and they giving discounts and people have started going to work out. So if that's the case, do I want to have this $5,000 or $6,000 machine at home? No. If you have another, again, what's happening overseas? If the question will arise is, with all these vaccinations, and I hope everything works out. Now, if you had another wave, for instance, 5 or 6 months down the road, if it didn't succeed, let's say people having reactions or whatever, now obviously then that would be very crucial, so that people will start, they're going to be even much more afraid to go out at that time. So basically, that will be closure of the economy. And yes, but right now, I think especially with theme stocks, I would be more cautious. Even if they have come down, it's based on, you go back and you have to do some fundamental analysis. Is based on what sales projections or the revenues they were, the growth. What was the expectation? So I would look at some of the, the suppliers, look at where the demand is going to come. So it's not just the technical analysis side of the things. I think it's more of what the expectation is from the consumer. So I would do a little more research on that.
I see. Thank you.
You're welcome. Any other questions?
So how do I join this Discord?
Okay, well, our masters are Jean-Claude and Martin, but I could also invite you. Martin, can you invite Henry, or should I go and because I had to send the invitation to.
I think you have to send the invitation.
So I have to do, okay, so I'm the as an administrator. All right, Henry, I will send you an invitation, or anyone else who wants.
You can just email it to me.
Of course, yeah. Well, I have, like, on Discord, I will go and I will add you to the Discord and then send you invitation, and you have to accept it. So
Okay,
okay, yeah.
sounds good. Thank you.
If anyone else wants, please, more than welcome. But yeah, that's how it works. All right. Any other questions or comments? Are we good for so this week? I don't know if you found the Forex basics interesting. This week we will work on more of the strategies and analysis and how to actually make a game plan. So I thought that's what we'll do this week. And then another question was, with all these IPOs coming, maybe we can do a class on, again, how I have analyzed IPOs from fundamental, but from the technical. When do I buy, for instance, IPOs? I don't know. That would be another one. I'm open. If there's any other interests, just let me know, whatever it works. But those are some of the ideas I have. So
that would be great, Ramin.
Quick, I guess maybe for the group, has anyone heard of this Forex broker Odin Service Group?
Odin is O-D-E-N.
ODIN.
Oh, Odin.
OdinForex.com is their website.
Okay. I mean, again, I've worked with Oanda and Gains and
Somebody recommended them and they're not well known, so I was just curious.
yeah, there's the large ones, again, Australia, UK, and of course USA. They have, those are the big ones. But I don't, but anyone else, I don't know if anyone else does. I don't do as much as I used to. I used to have sleepless nights and enjoyable rides. But also, by the way, if you set up a Tastyworks, for instance, or even Thinkorswim, you have access to them too, which is you have everything under one roof. So
Okay.
for thought also. It's very simple if you have everything, with options and.
I never used this Tastyworks.
Yeah, Tastywork has made it so much. And you also, with Tastywork, you can also do cryptocurrencies. You can do,
Okay.
yeah, so they make it very easy.
Nice.
Yeah. Okay,
I mean, I had a quick question,
please.
and it's you can go to any of the initial slides, when we look at the overall market. My question is, how would you play when we talk about embeddedness
Yeah.
and not and like oversold or overbought? How do you play it? So let's say it's embedded and you wait for it to go oversold and then you would short it, for example, or it goes into it goes above the line and then you wait for 3 days until it's a confirmed embedded and you go long. Is that how you play that?
Yeah, so one thing is, again, these are all basically what I'm looking for. Okay, let's look at this. So let's say it's Dow Jones, right? So, it's the game of probability, right?
Right, yeah.
Jean-Claude, what I want to do is I want to avoid the prejudgment and my bias. So right now, I tell you, as a human being, I'm looking at these prices and I'm thinking, can it go higher? I mean, how could it get higher than we are all-time high? From the fundamental point of view, there's really not a lot. We are basically expecting things going to happen when we are thinking that, okay, if the rates go up or if there's anything magically things, if the things get really bad, Chairman Powell, Uncle Powell, they're gonna step in, they're gonna print the money, they're gonna save us. As a matter of fact, if things get really bad, they might even, that's one of the reasons I think the markets are very favorable to like Janet Yellen as a treasury. I mean, Janet Yellen can talk to Speaker Pelosi and say, you know what, we got to change this and maybe we can start buying stocks ourselves. I'm just going to the extreme, right? So basically there's no logic in a sense. So what I have to do, I have to follow what the market is giving me. So I cannot make that assumption myself, thinking that because the market is completely oversold, overbought, and everything is, they don't make sense. I'm going to short this market. I'm going to go and buy tons of puts on these things. One of the things I have is this indicator. And what basically it's just looks at today's price and it just tells me where we stand. So I'm combining this, that again, I'm using standard deviation in one hand, and we can use also, if you recall, we use the TTM, I can use that. And then this embeddedness, basically what tells me that stochastics, most of the time, they are actually becoming leading rather than lagging when they're, when this area. That means there's a lot of momentum in this stock or in this holding, whatever this is, Dow Jones. So because it's there, I would not look at it as this is overbought. Overbought is when, it's a short term, like it goes up and comes down. And basically I look at the RSI, you can see it's over 80, but I'm looking at it as more of a strength. So this is embedded. That means it's been there over 80. The slow stochastics plus its averages, they have been above 80 for more than 3 days. So that tells me there's enough strength that it could stay. Now, the only time I will be cautious when one of these lines, whether red or blue, they go below 80. That's a warning sign. If it gets to 79, and let's say we are hitting the top of the channel, for instance, or the band, it tells me, Ramin, watch out. At least in the short term, we are tired and something is going to change. So this embeddedness is not my weakness, it's my strength. And once that strength is running out of steam, it comes down below 80, then, and it stays between 80 and 70, that means it's overbought. What that means is this market needs to cleanse itself. Now, if it continues going down, then the momentum is losing. So that's how I use it. So basically, it works better for me, at least, when we are oversold or we are embedded. I'm more of a, I try these with like gold and let's say silver with commodities. It works well. So because we've been in an uptrend market all these times, and if they match with the weekly, then it seems like when we've had the oversold or embedded on the sell side, it has worked much better than being on the overbought side. So, but basically that's a mistake. If you read any classical books or anything, anytime stochastics is over 80, RSI is over 80, CCI is over 80, MACD is over 80, well, this is overbought. Just be careful, just sell and ask questions later. We've gone one step beyond that and saying that, listen, markets they're overbought for a reason. And if there's that momentum, if somebody else is willing to buy my house for $10 more than the next guy, well, I mean, how far can we go? We can go as far as, how can you put a value on a house? They don't even do a replacement value on a house anymore. It's more of a comparison but it's the market. If for one house that I have, there's a 50 buyers, hey, they decide the price of the house. So it has nothing to do with my stochastic or RSI. I can go to 90 and still there will be somebody who will pay a lot more. So that's how I use the stochastics specifically, actually. So I use these indicators as a more of a, again, just telling me where is the strength rather than this rubber band is really stretched. I mean, you go back to 1990s, Jean-Claude, I make it short, but 1998, 1999, if you look at the RSI of all those stocks, they were overbought. The QQQ Nasdaq was overbought for 2 years. 2 years. So I would have sold and lost maybe 50-60% of the return just from, forget about 2000. It's like 1999. So you have to take these in cumulatively. So that's what I use this embedded, just thinking that if we are over 3 days in this move, so that means there's a lot of strength. If we are not, after 2 days we turn around, that means that, you know, it's been popped and it's going to go down. And that's what I have my 18-day moving average as my first target. And then I have the lower move band as my second target.
So would you say, for example, let's say if it's embedded and it turns to overbought, sorry, so it turns down below 80 again, then that would be a good time to sell credit spreads on top.
Yeah, that's right. So,
and if
go ahead.
And if it's embedded, we would have to wait. You would have to wait till it turns down before you would sell a credit spread. And
correct.
The same thing with puts underneath at the bottom.
Yes, so that will be a good one. Again, that's what like a squeeze, they play great. That's what expected move helps you out.
Right.
But also this one of the things that we found out is, again, I find it more on the downside than the upside. The first time, whenever we hit the lower band, what happens, especially in the big indexes, right? I've noticed that professionals, they come and they're selling puts. So you can do actually vertical. You can sell puts and, you know, do the credit spread on the put side. So like here, right? So we were oversold and we hit the Bollinger Band. After we hit the up top, we came down to the bottom, and then the professionals come in and they start selling. So they hold that Bollinger Band and then we go up. So it happens quite, as I said, I'm more on the way the markets have been, I find more opportunities on the downside of the things, on oversold than the overbought side. But yeah, you can do that. You can do that on 60 minutes. You don't have to do on a daily. But that stochastics, I would not use like on 5 minutes. It gets really choppy, or 15 minutes. I like to see the trend of the market, and I use it on a weekly and daily. Those are the main ones, and that's how I make my judgment.
Okay, so yeah, that makes sense. Thank you, Ramin.
You're welcome, Jean-Claude. Okay. Any other questions?
Oh, Ramin, I have a question.
Yes, sure.
I saw a lot of people using trend lines, resistance supporting lines.
Yes.
But we are here. I don't use that very much. What's your feeling about using those lines comparing to the indicator here? Have you tried those? Yeah.
Yeah. So I do the trending lines. I mean, when you look at basically, it's available all places, and the trending lines are sometimes I find them subjective, but I mean, you can see right here. I mean, I have, like I mentioned, gold, for instance. So I did have like my support line, right? So, but the lines, you have to remember, it is not a magic number. It's a zone. So you look at just an idea where it has been a lot of buying and selling, and use it as a zone. So even when we do like the TTM, you know, that analysis, the linear regressions, there's support, and, you know, there are resistance. So that the Finviz, for instance, it draws it for you. I mean, they already, you know, I just showed you the triangles. I mean, those are all the lines that you see. They're basically, they're trend lines. But the only problem is, and that's what I have problem with, like, uh, people who use waves and other things, is basically, it is a little subjective. I mean, here, for instance, this is a trend. This is how we made a channel, for instance. You know, it's a trend line. And basically what we did with the, like DXC, that's a trend line. And this is how we do the triangles. But, you know, like this trend line, you can become subjectiveness, and you can say, well, you know what, I'm going to use the wicks, the tails. Somebody say, no, I'm going to just use the closing. Somebody's going to say, you know, I'm just going to use the body. So basically that's how you create a zone. And that becomes, like in this case, it became your, you know, if it would, this was becoming your resistance zone. And then this becomes a support zone. So, but no, I do use it. It's just the other things, mathematically, I find them, obviously there's just so many out there that they're more helpful. And I don't want to be redundant also, Sean, because you have so much, you have access to a lot of things. So I don't want to take, you know, we spend an hour and a half every Saturday. I don't want to go through a lot of different ones. That's why we use Fibonacci, for instance, with like Forex. You will see that, yeah, the trend line, moving averages, and Fibonacci's work very well with Forex. So yes, we have a lot of support, and which is very much Fibonacci related with Forex. So, but that's the reason. I mean, there's no right or wrong answer, Sean. I just have such a limited time. I just use the things that has worked for me, and I emphasize on that. But you're right. So
I
there's
see.
a place for
Thank you.
trend line, definitely. You're welcome. Yeah. Okay. All
By the
right.
way, I just want to add one comment. It's the dog coin that is so popular this week. I think it rose like 150 times within like a week or two.
Yeah, that's okay. Yeah, that's, yeah, the light goes up when I see those things, but wow. Yeah. Oh. Any other questions? If not, then I look forward to seeing everyone on Wednesday. So we will follow up again, as I mentioned, with Forex. Just finish that. Just try to squeeze as much in that 1 hour as we can. And then I hope everyone will have a wonderful week. It's a beautiful weekend, and have a prosperous, profitable week ahead. And I'll speak to everyone on Wednesday. Thank you so much again.
Thank you, Ramin.
Thank
Thank you,
you.
Uncle.
Thanks,
Thank you,
Ramin.
Ramin.
Of course, as always.
Thanks, Ramin.
Okay.
Thank
Bye-bye.
you.
You're welcome. Bye, everyone.
Yeah, bye.